salaried, it is a straightforward process to file returns. All you need to do is just copy your Form 16. For small businesses and professionals, it is a different story altogether. You not only have to keep records of all the transactions and payments, but you need to take care that all the conditions laid by the Income Tax Department under the Income Tax Act are met to claim the deductions. So the laws of business and profession are more complex, and there are chances that even when an expense is made by a business, there are chances that they might miss out to claim the deduction. Hello and welcome. I'm Jyoti Arora, tax expert at Clear. We are India's largest tax and financial services platform. Do subscribe to our channel to support us and stay tuned with us for more videos on finance and tax. In this video, we will see some of the expenses you should not miss to claim if you are a business owner. Watch the video fully to understand it in brief. Now, all expenses made prior to the establishment of the enterprise are eligible for deductions under Section 35D of the Income Tax Act. Such expenses include preparation of feasibility reports, project reports, fees for drafting of legal documents, document printing charges, charges incurred for registering the company with ROC, and so on. These expenses must be recorded as preliminary expenses and should be deducted from gross income for the next 5 years. A business can claim up to 5% of cost of the project or 5% of the capital employed, whichever is lower, as deduction for the preliminary expenses according to the Income Tax Act. Another most important expense which you may miss to report is additional depreciation. Now, manufacturing units get additional tax benefits by way of additional depreciation. A business eligible under Section 35D that has installed a new plant and machinery can claim up to 20% of additional depreciation in addition to the regular depreciation in the year the assets were put to use. If the asset is used for less than 180 days in its first year of installation, then 50% of the additional depreciation, that is half of the 20%, that is 10% of depreciation is available. Balance 50% of additional depreciation can be claimed in the next year. Suppose you have purchased new machinery and claimed normal depreciation of 15% and you have not claimed additional depreciation of 20%, then you will end up paying more taxes on the unclaimed depreciation of 20%. Let us see this through an example. ABC Limited is a manufacturing concern and it purchases new plant and machinery of Rs 20 lakh and puts it to use on 8th June of the financial year. Another plant and machinery is installed for Rs 8 lakh on 15th of December of the financial year. Also, computer is acquired and installed in the office premises on 31st of December for Rs 3 lakh. Now, the amount of depreciation and additional depreciation will be calculated as follows. The depreciation rate for plant and machinery block for financial year 2021-2022 is 15%. However, remember that full additional depreciation of 20% is available only on plant and machinery of Rs 20 lakh acquired on 8th June, whereas 10% depreciation will be available on plant and machinery acquired on 15th of December. The additional depreciation will not be available on the computers as it is used in office, whereas you can claim normal depreciation on computers. Next is digital payments advantage. For the small businesses, traders, manufacturers, wholesalers, retail or trading businesses can opt for presumptive scheme of taxation under Section 44AD. Earlier, a minimum of 8% of total turnover or gross receipts were taken as net income chargeable to tax. But in a move to promote digital transactions and create a cashless economy, the Government of India has incentivized small traders and businesses by giving a beneficial lower rate of 6% of deeming profits on the turnover. Yes, you can now only declare your profits at 6% of your turnover, which allows you to save tax of at least 40%. So don't you think that your digital transactions play a significant role in reducing your tax liability? If yes, then please comment yes in the comment section below and let us know your thoughts on this. Next is bad debt write-off. Now, accounts receivable are not always collected in full, sadly we know that, and claims are rarely settled due to a variety of reasons. Sometimes customers simply evade payment and the cost of pursuing them is more than the recoverable amount. Sometimes they become bankrupt, sometimes the debt becomes time barred, and so on. Hence, if you have such accounts receivable, then you can claim a deduction for bad debt of the amount which you cannot recover. Yes, this is true, but remember, an SSE can take the deduction in respect of only those debts which have been included in the computation of income in the current period or in any previous financial year. Now, this is almost never the case of cash method taxpayers, that is, for most of us who report income when we receive it. Accrual method taxpayers report income as it is earned. If the receivables have been already claimed as income during the year or in the previous year, then a bad debt deduction or uncollected receivables is appropriate and will reduce your tax liability. Losses can be carried forward and set off against income from the subsequent years for periods set out in the given table. So losses from unabsorbed depreciation can be carried forward for an indefinite period. Business loss for 8 years, speculative losses for 4 years, and capital losses for 8 years as well. However, the carry forward of losses in respect of eligible startup is allowed if all the shareholders of such company who held shares carrying the voting power on the last day of the year in which the loss was incurred also continue to hold the shares on the last day of the previous year in which such loss is to be carried forward. Now, legal and professional fees that are necessary and directly related to running your business are deductible. These include fees charged by lawyers, accountants, etc. If the fees include payments for work of a personal nature, for example, making a will, you can only deduct a part of the fee that is related to the business. Legal and professional expenses are indirect expenses and are shown in the expenses side of profit and loss account. Unpaid professional fees is added to the legal and professional expenses account and is shown in the liabilities side of the balance sheet. Now, the startup incorporated between 1st of April 2016 till 31st of March 2023. Yes, the last date for claiming the tax benefits for startups has been extended to 31st March 2023 in Budget 2022, that is by 1 more year. So such startups will be eligible for getting 100% tax rebate on profits for a period of 3 years in a block of 10 years, provided that their annual turnover does not exceed rupees 25 crores in any financial year. With the startups, I mean recognized startups. These are the startups that are registered with Startup India program and are recognized by Department of Industrial Policy and Promotion, which has been set up specifically for this purpose. Folks, this is all about tax savings for small businesses. If you have any questions related to income tax, please comment below. We will reply to it as soon as we can. I hope this video was helpful to you. Thank you for watching it. Stay tuned for more updates. Take care, goodbye, and do not forget to subscribe to our channel. Bye.